Let's go to Kelley Keehn. She's a personal finance expert, founder of MoneyWise Workplaces. Kelley, debt regret, I'm going to call it, I'm sure is not new. But are you seeing in your day-to-day a higher level of this kind of regret?
Yeah, Merella, I am hearing from a lot of my readers and people that reach out to me that, it's crushing. It was crushing before the pandemic. They're certainly feeling it. You and Raheem were kind of talking about some of the survey numbers that came out. Of that survey, what was really shocking to me was that 35% were saying that they actually don't make enough money to cover their bills every month. So that type of stress, Merella, just has people feeling apathetic, hopeless. And what I worry about is that they may not realize there's always something that you can do to make your situation better.
Okay, we'll talk about that in a second. I'm just wondering how much of this is interest rates, how much of this is inflation, or a combination of both?
Yeah, I think it really is. I think at the end of the day, if you have a line of credit or a variable rate mortgage, you've seen your rate nearly triple. We keep hearing these surveys that people are $200 away from not being able to pay their bills. I think it's much more significant for a lot of Canadians. And, as you know, Merella, inflation has not just been crippling for a few months. It's been, a long time that people have been facing the high price of everything. So maybe people have just barely got themselves back to work, back on their feet from COVID. And this just sustaining and persistent increase of everything has been taking its toll on people.
Let's have a look at detail about millennials. It says millennials regret the debt. 61% have these huge regrets about the amount of debt they have. Why do you think that generation is in this situation?
Well, certainly millennials did not fare as well during the pandemic. They didn't have the emergency savings that a lot of older generations had. Maybe they just got into the housing market or just rented a place for the first time. Already we're struggling with student loan debt. Of course, maybe like to have a little bit more fun than other generations. And you take all of that together and it's the perfect storm for them having to take on more debt just to survive.
Okay, so it also found that men spend more on essentials, and that actually surprised me. I thought women would spend a lot more on essentials.
I really was surprised by that too, I have to say, Merella. I don't know. Are men doing a little bit more shopping? I know my husband's doing the grocery shopping a lot more than I am these days. So maybe we're seeing a little bit more of a balance of both sexes spending. But I have to tell you, that number was surprising to me as well.
Okay, so as we talked about, there's a rate hike that is expected this week. Those with variable mortgages are going to get hit again. What are the options for people in a situation with a variable mortgage? Can you go to your lender and work something out?
Yeah, a little bit to unpack there. Yeah, we're very likely going to see another 0.25% increase. That is actually going to take the benchmark lending rate to a 22-year high. Shocking. So regardless if you have a variable rate, a regular mortgage, Merella, yes, open up the lines of communication with your bank. Put it in their hands to come up with solutions for you. The Financial Consumer Agency of Canada has actually put out a number of guidelines for the big banks of how to work with consumers. You can look at things like deferrals. A lot of people had to do that during the pandemic. Maybe extending out your amortization. Not something that you actually have to ask your banker for, but you can skip one full mortgage payment per year. If you're in good standing with your mortgage, you can actually hop online to do that. Might put some much needed money into your budget, your cash flow. But the thing is, all of these deferrals and extensions, skipping a payment, this is going to mean paying your mortgage for longer and paying more interest. So as the FCAC has also urged Canadians, this is temporary. This is to help you out of a time of very high interest, high cost interest. So once you are back on your feet, make sure that you're also talking with your banker of how to get back on track. Maybe upping your monthly payments when things are a little bit not so stressful, doing lump sum payments, things of that sort. So just because you take these extensions, it doesn't mean you cannot get back on track when interest rates come down or your situation improves.
Is the conversation pretty much the same if you have, as you mentioned, a line of credit?
Absolutely. I mean, if you have a line of credit, the thing to think about is you're only forced to make interest-only payments. And because of that, a lot of people are only making interest-only payments. When interest rates were so much lower, maybe on a $100,000 line of credit, you might have been paying $250 a month. Now you're probably going to be up at over $700 this week. That is significant. So as a monthly fee. Now, keeping in mind, you're not paying that down at all. So if you are finding yourself in that situation, but you're just surviving right now, fine. But you definitely want to sit down with your banker or a financial planner or a credit counselor to come up with a plan. How are you actually going to pay that line of credit down, in addition to maybe other debt that you have? And then, of course, trying to save for your, your future, for your retirement, for emergencies. It's a lot for Canadians, Merella.
Absolutely. Are there any other options Canadians need to consider, any other mindset they need to get into?
Really, three things. I mean, simple, right? You've got to cut expenses. Now, this doesn't just mean foregoing your coffee, lunches out, things of that sort. This is really digging into, like, what are you paying for your credit card interest rate? If you're in a 24% interest rate credit card, for example, you can call up your bank and get into a product that's at 12.99%. So when I say cutting, it's not just cutting subscriptions and the things that we always hear about, maybe shopping around for your home and auto insurance, things that can save you a significant amount each year. Second, can you bring in more money? Is there anything, any side hustle, dock walking service, delivery, what have you, that's going to bring in a few extra $100 per week or per month that can go to, fund your emergency savings account, buy much needed things, or just a little vacation for you and your family. And then very lastly, there are millions of dollars being left on the table every single year with employees not matching, not leaning into their employers' matching programs, digging into their wellness accounts. There is free money out there, but Merella, I also get it. When people are stressed, they're not thinking about, creative ways to bring in more, but I hope somebody watching this today will do exactly that.
Yeah, time to look around for those money saving ideas. Kelley Keehn, appreciate you joining us on the program. Thanks very much for your time.